Hello there, welcome to yet another episode. In this episode, we will be looking at why you probably pay more taxes than a billionaire. This is Amy from Gen Z Wall Street Millennials. I hope you are having a good day. Let's get started. This is one of those prickly topics that no one seems ready to discuss. However, here at Gen Z Wall Street Millennials, we believe in looking at the reasons why things are the way they are. Billionaires pay little to no taxes for the simple reason that most of their wealth is held in businesses. They are shareholders of companies. This may not seem much on paper. However, in the world of taxation, it spells the difference between a centibillionaire and your local millionaire. It determines how much you pay in taxes. A corporation/business is regarded as its own separate person. It has a bank account, legal address, can accrue debt, and even get into contracts. It's pretty much another version of yourself. Imagine having multiple versions of yourself located in different countries, subject to different tax and accounting regimes. Also imagine having small branches in every American state and local town. That defines the very essence of a corporation. Its sole purpose is to maximize value to the shareholders. Who are the shareholders, you might ask? Well, that's you. Yes, you are the shareholder. You see, accounting is the language of business. Accounting is full of synonyms. Let me give an example. Warren Buffett, Berkshire Hathaway, Geico, National Indemnity, and See's Candy all refer to the same person. Let's try again. Amazon, Blue Origin, Whole Foods, Twitch, and the Washington Post all refer to the same person. Who might that be? Yes, you got it. Jeff Bezos. Funny, isn't it? This lies at the heart of how one man, or a group of 15 individuals, can accumulate so much and legally hold on to it. Throw in corporate law, accounting, wealth management, and estate planning, and you can begin to see where all the frustration with the ultra-wealthy comes from. I haven't even mentioned private equity, venture capital, offshore finance, private banking, SPACs, and high cash value life insurance, BOLI/COLI, just to name a few. The rich, as they say, are different from you and I. They have a vast array of tools at their disposal. But I will leave that for another video. Of interest today is the buy, borrow, and die strategy. Most Americans have to work to live. When they do, they get paid, and they get taxed. The federal government considers almost every dollar workers earn to be income, and employers take taxes directly out of their paychecks. The Bezoses of the world have no need to be paid a salary. Bezos' Amazon wages have long been set at the middle-class level of around $80,000 a year. For years, there's been something of a competition among elite founder CEOs to go even lower. Steve Jobs took $1 in salary when he returned to Apple in the 1990s. Facebook's Zuckerberg, Oracle's Larry Ellison, and Google's Larry Page have all done the same. Yet this is not the self-effacing gesture it appears to be. Wages are taxed at a high rate. That's a mere 1.1% of what they listed on their tax forms as their total reported income. The rest mostly came from dividends and the sale of stock, bonds, or other investments, which are taxed at lower rates than wages. Buffett has famously held onto his stock in the company he founded, Berkshire Hathaway, the conglomerate that owns Geico, Duracell, and significant stakes in American Express and Coca-Cola. That has allowed Buffett to largely avoid transforming his wealth into income. There's also a second strategy Buffett relies on that minimizes income, and therefore taxes. Berkshire does not pay a dividend, the sum that many companies pay each quarter to those who own their stock. Buffett has always argued that it is better to use that money to find investments for Berkshire that will further boost the value of shares held by him and other investors. If Berkshire had offered anywhere close to the average dividend in recent years, Buffett would have received over $1 billion in dividend income and owed hundreds of millions in taxes each year. Many Silicon Valley and infotech companies have emulated Buffett's model. Microsoft and Oracle do not pay dividends. Google, Facebook, Amazon, and Tesla do not pay dividends. So how do megabillionaires pay their megabills while opting for $1 salaries and hanging on to their stock? According to public documents and experts, The answer for some is borrowing money, lots of it. So how do mega-billionaires pay their mega-bills while opting for $1 salaries and hanging onto their stock? According to public documents and experts, the answer for some is borrowing money. When I say borrowing money, think business credit. Debt is long-term, credit is short-term. Business credit funds working capital and keeps the company obligations current. Debt, on the other hand, is long-term, like corporate bonds and loans. Business credit is the gasoline that thrusts the net worth rocket. Not only does it build business credit scores, but makes the business self-funding. Amazon grew this way, and so did Walmart. Everything on Walmart shelves is on business credit. So much so that monthly sales pay the previous month's business credit dues. A peek into Walmart's business credit report shows that it has over 8,000 positive reporting trade lines. Facebook's business credit report tells a similar story. Billionaires will usually have their business own everything. So much so they own nothing in their name. John D. Rockefeller is famous for using this technique. By doing so, every expense, desire and craving becomes a business expense. The business picks up the tab for everything in your life. If you need something, it's the business that needs it. As Jay-Z once said, you become the business. If you own a company and take a huge salary, you'll pay 37% in income tax. Sell stock and you'll pay 20% in capital gains tax and lose some control over your company. But take out a loan, and these days you'll pay a single-digit interest rate and no tax. Since loans must be paid back, the IRS doesn't consider them income. Banks typically require collateral, but the wealthy have plenty of that. The vast majority of the ultra-wealthy's loans do not appear in the tax records, since they are generally not disclosed to the IRS. But occasionally, the loans are disclosed in securities filings. In 2014, for example, Oracle revealed that its CEO, Ellison, had a credit line secured by about $10 billion of his shares. Tesla reported that Musk had pledged some 92 million shares as collateral for personal loans. With the exception of 1 year when he exercised more than $1 billion in stock options, Musk's tax bills in no way reflect the fortune he has at his disposal. In 2015, he paid $68,000 in federal income tax. In 2017, it was $65,000, and in 2018 he paid no federal income tax. In both 2016 and 2017, investor Carl Icahn, who ranks as the 40th wealthiest American on the Forbes list, paid no federal income taxes. Icahn had an outstanding loan of $1.2 billion with Bank of America, among other loans. It was technically a mortgage because it was secured, at least in part, by Manhattan penthouse apartments and other properties. Icahn acknowledged that he is a big borrower. I do borrow a lot of money. Asked if he takes out loans also to lower his tax bill, Icahn said, "No, not at all. My borrowing is to win. I enjoy the competition. I enjoy winning. There's a reason it's called income tax," he said. The reason is if you're a poor person, a rich person, if you are Apple, if you have no income, you don't pay taxes. Michael Bloomberg reports high income because of the profits of his private company. In 2018, he reported income of $1.9 billion. When it came to his taxes, Bloomberg offset his bill by using deductions made possible by tax cuts passed during the Trump administration, charitable donations of $968 million, and foreign tax credits. Bloomberg LP is a limited liability partnership, these are not taxed. There you have it, that is how a billionaire is able to pay less taxes than you do. I hope this sheds some light into the topic. I also hope you will engage in your own financial literacy journey. I believe the gap between the rich and everyone else is a financial literacy gap. If you can learn more about what is going on, I don't see why you can't join this group of elite billionaires. Thank you for taking the time to watch this episode. What do you think about tax avoidance and tax planning? I would love to hear your comments below. See you in the next episode. These videos take time to prepare, therefore consider supporting the channel by clicking the links below. Cheers, guys! Gen Z Wall Street Millennial signing out.